And trade expected to remain mixed today. The local index tracking weak sentiment, while the rand raced to its best level against the dollar in about 4 months, extending its winning streak. Independent analyst, markets analyst that is, Jimmy Moyaha, joins us now for a quick markets update. Jimmy, good morning to you. Let's talk through those factors that are driving local trade this morning after yesterday's trade.
Morning, Toily. Morning to the viewers. By all accounts, sentiment seems to have improved in the markets. We know that there's a couple of data points that continue to come out that support the positions of the central banks around the world, that they might have reined in inflation, that also support the fact that we might see softer landings where we had previous recessionary concerns. And by all accounts, the markets are absolutely loving that information and using that information to fuel whatever positivity they can get. I mean, if we look at U.S. markets overnight, Dow Jones was up about 1%, the S&P and the Nasdaq were up about 0.75%. Going into Asian trade as well, we saw that the Hang Seng, the Nikkei, and the Shanghai Composite were all in the green. We're seeing that going into the European session, start of European session, the FTSE's up more than 1%. The DAX is up 2/3%. Our local bourses opened in the green, and the rand is stronger. So by all accounts, it looks as though risk on sentiment seems to be returning to the market, whether it's at a slower pace than what we anticipated, but it is returning nonetheless. We're seeing that still also filtered through to some of the commodities pricing. We saw yesterday that commodities had a fairly good day as well, and the expectation is that that might still continue today. From a South African point of view, obviously, there are some data points that would be of keen interest to South African investors and those invested in our markets. We know we've got our CPI print out probably in about 25 minutes at 10 o'clock this morning, and that's going to be very, very important this time around, because we know we've got an interest rate decision that's coming out tomorrow that will largely be influenced by today's inflation print.
You talk about commodities. Let's pick on them. Gold coming down from its peak as the dollar strengthens, while oil dips amid the mixed market signals. Jimmy, help us make sense of those moves.
Well, the gold price is actually holding quite steady. I mean, if you take a look at the gold price's performance for the month of July, we're up about 3%, sitting at $1,980 or so dollars per ounce, and that looks like a very positive point to be at. I mean, it has recovered all the gains that it lost in the previous month from a performance point of view, and I think if we look at the sentiment that we're seeing, you're starting to see that there's a bit of a divergence between the correlation between gold and inflation. It's no longer that historic situation that we saw pre-pandemic where gold was seen almost entirely as an inflation hedge. We're starting to see now that it's being viewed as an opposing or negatively correlated to the US dollar. So what price movements we see in terms of weakening dollars have resulted in the strengthening of the gold market. In terms of the oil price, something that we've spoken about on an ongoing basis, to say that the OPEC plus countries are very concerned about maintaining control over that oil price. It's still sitting at about $80 a barrel, so $79.42 a barrel to be exact at the moment. But the oil price is very much in focus from a demand perspective, but also from a supply perspective. So where demand has been lagging on the Chinese side of the economic recoveries as one of the largest consumers and importers of crude oil and Brent, we're seeing that the result of that is that the OPEC plus countries, Saudi in particular, are maintaining that oil price and are implementing supply cuts where needed, implementing adjustments where needed so that it doesn't dip below that $70 a barrel mark. So holding steady where it is at the moment. Whether or not we'll break back above $80 a barrel as we did last week seems fairly likely at this point, but if we'll consistently hold above that, there's a couple of other factors still in the air around that.
Let's talk company news. Pick n Pay publishing a trading statement and a trading update for the 20 weeks, which ended on the 16th of July, 2023. How did they fare in the period under review?
Yeah, so not the best set of results for Pick n Pay. They did announce that a couple of things were of concern for the business in terms of increasing expenditure that they've had to incur, and that's going to sort of have an effect on when they report their first half of 2024 numbers. We're expecting to see that headline earnings per share, basic earnings per share, will decrease by more than 20%. They haven't given clearer guidance as to what that final figure looks like, but we know that again, from an expenditure point of view, they've incurred an increased abnormal cost to the tune of some 610 million rand, and that's anywhere from the 300 million rand that they've had to incur for diesel in the last 4 months to the 250 million rand that they're anticipating will be the cost of their restructuring efforts. They did comment on those restructuring efforts, saying that they have finalized 2 of their strategic restructuring plans, and they're going ahead with some continued restructuring, and they're anticipating that that will continue to affect their costing, but they will offset that against some of the benefits or the cost-saving benefits that they're anticipating they will realize from that, to the tune of some 300 million rand there as well. So increasing costs, increasing concerns around where the group's positioning is, but overall they're still saying that from a strategic point of view, this looks to be the direction that they want to move the company and the business in. They're saying that their business units in Zimbabwe, Rwanda and other African countries have been performing, but against the exchange rate fluctuations and volatility that we're seeing in exchange rate markets, that has had an effect on how that performance has been realized through to their books. We're still anticipating that those final numbers will be presented later around the sort of a more detailed breakdown. At the moment, we know that those numbers are sitting with Pick n Pay's auditors, but they gave some guidance around some of the sales figures and where the expectations are from a sales growth perspective for the 20 weeks ending July.
Let's conclude with the share price of South Africa's largest steel maker, ArcelorMittal South Africa, plunging 43%. What drove that decline?
Well, markets were absolutely not happy with the developments out of the ArcelorMittal stable. If you remember, yesterday we saw a trading statement out of ArcelorMittal, but prior to yesterday's trading statement on a Monday, we saw that there was the resignation of the chief financial officer. Now, anytime there's executive adjustments or executive involvement where it coincides with company news, there's always a keen interest for markets to take a look at what might have been happening there. And the trading update warned of a rather severe turnaround in performance to the downside for ArcelorMittal. We're expecting headline earnings per share and basic earnings per share to be down anywhere from 114 to 117%, swinging from a profit to a headline loss per share, and that definitely is not what the market wanted to hear. From a business update point of view, they alluded to the fact that increasing load shedding has affected the business's ability to maintain consistent operations, but alongside that, it's resulted in them not being able to realize working capital, having to increase their net debt, which has obviously increased their net interest costs, which has obviously affected their ability to realize profitability. And they're citing those as the chief reasons why they're going to be swinging from a headline profit to a headline loss. But obviously markets being sensitive at this moment to a lot of company news and company data points, the fact that we saw resignation from the CFO who had just been appointed and was in the role for less than 30 days, and coupled with the fact that the performance didn't come around, or the trading update didn't spell positive performance, markets were really not happy with that. So the share price is now back around R1.76. It opened in the red. It's closer to R2 now, so we closed at about R2.20. We gapped down this morning to about R1.60. We're back just under R2 a share. This is well off the 2022 highs of 11 Rand a share that we saw, so we're very close to pre-pandemic lows where we were. In pre-pandemic levels, we got below 1 Rand a share at some point, so not very good updates from the ArcelorMittal stable, and the share price is reflective of that.
Jimmy Moyaha is independent markets analyst. Thank you very much for that markets update. Very detailed indeed. All right.